So many real estate investors invest for cash flow, and I get it. I often invest for cash flow myself. It's really nice to see that money come into your account every month. But 46-year real estate veteran Arn Cenedella actually invests for growth over cash flow. And I'm curious to hear his thoughts on that. Why is that? After all of his experience in the industry. So, as always, I'm your host, Brian Davis, co-founder of Spark Rental. I'm on this journey with you guys. We meet every month as an investment club, vet investments together, go into them together. So I'm very curious, Arn, why do you love investing for growth in your real estate investments over cash flow?
Yeah, it's a great question, Brian. Happy to be here. So yes, I have a little bit of a contrarian view. Um, for me, real estate investing is more about building net worth, increasing equity, building net worth, because at a certain net worth, one doesn't have to worry about cash flow anymore. And by that, I mean, when you get a net worth of three, four, $5 million, you can have as much cash flow as you want. And so it's not really a concern. Now, to be clear, I only invest in properties that do cash flow. I do believe the properties have to be self-supporting. You make a capital investment into the property, maybe including CapEx money, and that investment should be enough to keep the property self-supporting till you exit it. So cash flow, in my mind, is critical to make the property self-supporting. But once that threshold is reached, then what I'm really looking for is growing equity, net worth. And what I would submit is most of our investors at Spark Investment Group are high income, very busy professionals, and their W 2 income supports their lifestyle. They don't need current cash flow. These may be people late 30s, early 40s, moving into late 40s, and they're more focused about what's their life going to be like, what's their nest egg going to be like when they turn 55 and 60. They don't need cash flow now. They want to build that net worth. And I'd leave your listeners with one question to kind of sum up. Would you think investor A, who had 2 million of investable cash, could that investor generate more cash flow than, say, investor B that had 5 million of investable cash? And it would seem to me the answer is obvious. The one with the most capital can generate the most cash flow when it's appropriate and when they need that cash flow, which I would submit is not at their peak W-2 earning career.
All right, so that makes sense. And I do totally agree that investors should not be buying any properties with negative cash flow. You're setting yourself up for failure if you do that. But one of the arguments out there for investing for cash flow when you're investing in real estate, whether you're an active investor or a passive real estate investor, is that cash flow is pretty predictable, right? Rents almost never drop, whereas property values, fluctuate a lot more than rents do. So cash flow is predictable. It's pretty easy to forecast it into the future. Uh, how do you go about predicting growth or appreciation as a growth investor?
Yeah, so I would say there's an element of faith there. And there's also an element of experience. Got into the real estate business 1978. And I would say if anybody was to look at the historical record of real estate values, I think typically what one would find is you have 5 or 6, 7 years of up, fairly significant up often. You then have 1 or 2 years of a correction, a natural and logical. Things are hot, things are increasing. Logically, in nature, you need to take a breath. There's a correction. But my experience says the correction is always much less than the up. And I'd say right now in multifamily, we had about 10 boom years. We've had a year or two of correction. My sense is we're now going to hit the plateau. And that typically lasts another year or two, which only sets the floor for the next run up. And every cycle, the floor is bigger. Another way I would say that is, does anybody expect the value of real estate, the cost of rent to be less 10 years from now than it is today? I don't see there could be much logical argument to make that. Now, this, my approach presupposes you are set up for a long-term hold. And so what I'm kind of suggesting is if you look at real estate as a 7 to 10 year hold, you can enter at any cycle in the market and you're probably going to profit. The other important thing is you need to go up, you need to go into these investments properly set up. And what that means to me is long-term fixed rate debt, low leverage, and you buy the property and you put away ample cash reserves for when Murphy's Law strikes, right? When a tree falls through the building or whatever happens. So you go in with ample cash reserves. So in my experience, long term, the only way you lose in real estate is if you over leverage, don't have ample cash reserves, and then some economic condition worsens and you have turbulence and you don't have the capability to ride out that year or two of turbulence, that's how you get hit. Whereas if you set it up right and you can survive that year or two of turbulence, ultimately you're going to win. Now, I'll admit, I have no idea whether cap rates will be 4%, 6%, 8% 5 years from now. Sorry, I don't know. I do know my life experience tells me the value of real estate's going up. So that's how I kind of approach it more than kind of pro promising some projected return. It's more about if you can buy the property today and it makes sense, it pencils, it cash flows, and you have logical and reasonable expectations for the future prospects of this growth market and this property, then I think you safely invest and you let time unfold. And in my experience, you're going to win. So that's kind of my answer. But you ask a valid question.
Yeah, no, that all makes sense. And that echoes something that my co-founder Denny and I talk about all the time, that, we don't know what the short-term results are going to be as far as, like you said, cap rates, property values, interest rates, over the next, I couldn't tell you what's going to happen in the next 3 years, for example, what's going to be the hot asset class or whatever. But over the next decade, there will be a good time to sell, right? So if you can go into it with a long-term strategy and a long-term commitment, and you're okay with not knowing exactly when the exit is, and letting the market kind of dictate that exit, then I agree that you can sleep easily at night knowing that you're probably going to come out ahead, and probably by a lot, actually. So anyway, no, that all makes perfect sense. So, ladies and gentlemen, Arn Cenedella, 46-year real estate veteran. He's the co-founder of the real estate syndication firm Spark Investment Group. No relation to Spark Rental, by the way, if you feel the need to say that. Arn, in 30 seconds or less, how do you help people, and how can people connect with you if they want to take you up on that help?
Yes, so name of the company Spark Investment Group. Website is investwithspark.com. And basically, what I do is I help busy professionals that don't have the time, energy, or knowledge to actively manage real estate. I help them diversify their portfolio. I find many investors are really heavily invested in the stock market, which is fine. I have a nice stock portfolio, but I help busy professionals diversify their portfolio into multifamily real estate. My only market is Greenville, South Carolina, where my partner and I live, and that's how we help people.
Awesome. Well, guys, if you enjoy these quick, focused conversations that we have with real estate experts and other financial experts, please rate and review the show. It makes a huge difference to Denny and me. And on that note, we will catch you on the flip side. Want the cash flow, appreciation, and tax benefits of real estate without becoming a landlord? You've heard of REITs and real estate crowdfunding, but you probably don't know much about 5 other ways to invest passively in real estate. So we put together a free video course for you to show you how to consistently earn 15% plus returns from 5 lesser known hands-off ways to invest in real estate. And even more importantly, we'll keep risk front and center in that whole discussion. Because really, what's the point of investing for high returns if you also take on high risk, right? So visit sparkrental.com/free to take our free course. Each video is snackable at 10 to 15 minutes long, and the entire course takes less time than watching a movie. Looking forward to chatting with you from within the course.